and mainly because we've had the biggest credit bubble in the recorded history, at least since 1980 to 2020, when interest rates went from 15% to almost zero in the 10-year yield. And it was really easy just to finance everything. And this is shifting now, and it's going to be a huge historic shift. And if you don't have some kind of exposure to gold, silver, or hard assets, I think you're going to lose out.
We are witnessing a global phenomenon. Currencies worldwide are steadily declining relative to gold, or conversely, gold is appreciating against them. On Wednesday, the US dollar approached a 5-month low against other major currencies, driven by President Donald Trump's economic and trade policies, which have triggered heightened market volatility. Financial analyst Mario Innecco believes this trend has been unfolding since the early 2000s, marking a prolonged devaluation of fiat currencies and a global restatement of wealth. According to Innecco, much of today's perceived wealth is artificially created through unsustainable debt, making corrections inevitable. In such periods, gold serves as a monetary proxy, preserving value as fiat currencies depreciate. A significant shift is taking place in global central bank reserves, with many nations reducing their reliance on U.S. treasuries and increasing their gold holdings to a 30-year high. This growing distrust in fiat currency systems fuels discussions about a potential monetary reset, where gold-backed currencies could play a critical role in global trade and financial stability. Warren Buffett's decision to accumulate a massive cash reserve signals an awareness of the fragility of artificially inflated markets and economies. As monetary aggregates expand, national currencies lose purchasing power, impacting all currency holders, whether they hold personal debt. Gold rises in response, maintaining its value while fiat money erodes. Echoing past economic cycles, Innecco suggests that we are entering another phase of wealth recalibration that has unfolded for decades. As history has shown, when falsely inflated wealth is reset, gold emerges as the ultimate store of value. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
The corresponding rise in gold, especially when it is a global phenomenon, all currencies actually going down versus gold, or gold going up versus them, as it is now. Well, it's been happening since 2000, really, the beginning of the century, is in effect a devaluation of all the world's currencies and a restatement of wealth on a global scale. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right, as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. Falsely stated and assumed wealth, largely created out of the assumption of debts that cannot be borne, must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates, causing a devaluing of the national currency that denominates their wealth. This happens to all currency holders, regardless if they personally assume any debt. Gold rises because gold is a monetary proxy inversely related to a nation's currency. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. Debt deflation has become currency inflation. They are one. I don't think it can be any more clear that we are entering such a kind of event where gold restates falsely created wealth or falsely stated wealth. And it has been happening, of course. I would say since the beginning of this century, gold has outperformed stocks and bonds, even though you don't hear that said in the mainstream financial press. So I've heard what President Trump has been saying lately, and I know what he's doing is really all topsy-turvy. And I see a lot of people are blaming what the stock market is doing for the trade wars and tariffs. But I think this was going to happen no matter what. Why did Warren Buffett load up on a third of $1 trillion in cash? Well, because he knows what's coming. These moments of falsely stated wealth don't last forever. So I even noted that Trump said that the economy and the markets have been artificially inflated by all the funny money, all the money printing, all the deficit spending. And it sounds very familiar with what Jim Sinclair said there about how everything becomes falsely stated. Do I think President Trump has read that? I doubt it, but who knows?
Since 2018, gold has outperformed the S&P 500 in annual returns for the past 7 years. In 2023, the precious metal saw a 25.5% increase in US dollar terms, narrowly surpassing the S&P 500's return of 25%, including dividends. As we enter 2025, this upward momentum continues. Gold gained 6.4% in January alone, reaching new all-time highs, while the S&P 500 rose by just 2.8%. Over the past 2 decades, gold's spot price has surged by 735.5%, compared to the S&P 500's 848.1% gain. According to financial analyst Mario Innecco, gold is experiencing a significant breakout against the S&P 500, a pattern known as a turtle signal in momentum trading, originally developed by Richard Dennis. He notes that gold's relative performance against the S&P 500 has reached a 4-year high, signaling a potential shift in market dynamics. Innecco believes that as concerns over currency devaluation grow, investors will increasingly turn to commodities like gold and silver as a hedge against inflation and economic uncertainty. Now, let's redirect our attention to a video.
I saw a story on King World News about this, that the price of gold versus S&P is breaking out. And I had looked at it, so I looked at it again. And yes, it's a massive breakout here. This is what the momentum traders call a turtle signal. What's a turtle signal? Well, it's a trading system that Richard Dennis, who was, well, he's still around, I think, but he was a trader, commodities trader in the 80s. And he put an advert in the Wall Street Journal trying to recruit anyone to trade his system. And it's to do with breakouts, usually a 22-day breakout or a 55-day breakout. But in the case of gold versus the S&P, the breakout, yeah, it's massive, and it's the highest level in 4 years. So this is very significant, this breakout here. And as I said, we're going to have ups and downs the next few years, but the general trend is for gold to outperform the S&P. And I think I spoke about that in my last live stream on Sunday. I'm going to put it up here in the cards with Rafi and Clive. And I talked about how gold could go up multiple times, I think, versus the NASDAQ, or it could have been the S&P. And you can look at the Dow Gold ratio as well. That's starting to break down. I think we are at a almost 5-year low. And we had consolidated for quite a few years, the last few years, between like 15 and 20. And now we've broken down. And just like the chart of the gold versus S&P, it's breaking down because we're showing it the other way. And I think a lot of money is going to start flowing into commodities as well, the non-monetary commodities. And why is this happening? Well, it's a rebalancing of the scales. The scales got favored too much financialization, paper assets, speculation. It didn't favor real things like commodities that we need to live, commodities that we need to use as inputs in all our high-tech gadgets and everything that we use to move around, everything that we use to have shelter. It's been totally neglected. A huge historic shift, and if you don't have some kind of exposure to gold, silver, or hard assets, I think you're going to lose out.
Gold's steady appreciation against global currencies and its outperformance of the S&P 500 in recent years highlight a broader trend of fiat currency devaluation and shifting investor sentiment. Central banks worldwide are increasing their gold reserves to historic levels, signaling declining confidence in the current monetary system. Meanwhile, gold's breakout against equities suggests a growing recognition of its role as a hedge against economic instability. As monetary policies continue to erode purchasing power, gold's ability to preserve wealth positions it as a key asset in an evolving economic landscape. Beyond gold, which other assets do you think offer the best protection in a rapidly shifting economic landscape? Join the conversation. Share your thoughts in the comments. Give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.